Hi there, it's Ryan G. Wright with DoHardMoney.com coming to you live with a question of the day. Every single day I answer a question, and today's question of the day is, how do I buy real estate tax liens? If I'm interested in buying a real estate tax lien, how do I actually go about doing that? And if you've got a question of the day you'd like me to answer of real estate, finance, investing, please type it in the comments below and I would be more than happy to. So unlike my normal pacing around, walking, I'm doing this one sitting because I got some feedback saying I made somebody a little bit dizzy by walking around. I'd really like to know your feedback. If you'll type it in the comments below, would you like me giving you a tour and seeing things, or would you rather I'm sitting still acting like a mummy? I don't know. I'd be interested in your thoughts on that. But let's talk about real estate tax liens. So here's what happens, and every state's a little bit different how they do this. But states and municipalities, basically what happens is somebody owes taxes, and we're talking about property taxes, not income taxes. But if somebody owes property taxes, let's say their taxes on their property are $2,500. If they don't pay that $2,500, the government, the state, basically says, well, we need that money because we've made commitments. And so if they can't come up with that money, what we're going to do is we're going to sell the taxes and somebody else can pay that $2,500. So as an investor, once it's reached a certain point, they're going to say to the homeowner, they're going to say, hey, you owe us the taxes. They don't pay them. They send the notices. They send more notices. And after 90 days or 120 days, or it's different in every state, they're finally going to say, we're going to have a tax sale. And some of them it's even a year. And a tax sale basically gives me the right to go in and buy that taxes. So what I do is I go pay $2,500. Now, if that homeowner ends up paying off the $2,500, he also has to pay an interest rate. And in some cases it's 5%, in some cases it's 18%, but that's preset by the state or by the government agency, the county. And so what happens is then when they go in to pay that, they pay the county, and then the county pays me my $2,500 and pays me the interest. Now, sometimes it's a flat interest, sometimes it's a percentage, and then what happens if the person doesn't pay their taxes on the second year, then I can buy the second year's taxes and I put out another $2,500. And depending upon the state, in some cases after I buy 3 or 4 years worth, then I can actually do a foreclosure. And if there's another loan on the property, I can actually foreclose out that loan, where that loan would then pay me off in full plus my interest and fees and attorney's costs. Or if they don't, if I foreclose, then I end up with the property. And there's no other liens on the property because I foreclosed those out. That's rare, but it does happen occasionally. But the real thing that happens a lot with tax liens is people end up buying tax liens on properties that they really don't want. So the reason why some people wouldn't pay their taxes is if it's a property that has problems. So let's say that there's like some soil issues, or there was some gas leak or a gas tank on it or something like that, which means you're buying a liability. So you've got to be careful what you're buying. Typically, if there's a house there or something, you're in pretty good shape, and most of the time you just get the taxes. Now, this is a bid. Sometimes there's an online bid, and sometimes it's an in-person bid. In some places they bid down the interest rates. In some places it's just an auction. It depends, and that's going to vary from state to state. But basically what you're doing is you are paying the taxes for somebody else. It becomes where they owe you the money. The county is the one collecting that. In the event they don't, you start a foreclosure, and then with that foreclosure, then you can end up with the property. It doesn't happen a lot, but it's something to take into consideration. There's a lot of paperwork involved with it, and there's some due diligence involved with it as well. So that's the whole world of real estate tax liens. I personally haven't bought any real estate tax liens. I have friends that have bought a lot of real estate tax liens. I'm looking at some partnership on some real estate tax liens, but I haven't done anything quite yet. But I think it's something that you should be aware of. Again, if you've got a question of the day, go ahead and type it in the comments below, and I would be more than happy to answer it for you. Also, if you'd like some help in your real estate investing, check us out over at DoHardMoney.com. We've got software, tools, resources, ways to find properties, and so much more. Check us out there, and we'd be more than happy to help you out. A couple other videos you should check out: how to find off-market properties. You can click on that video over here. I think you'll really enjoy it. And another video is what real estate investors look for in a property. Things you should be looking for in a property. You can check that out over here as well. Otherwise, make it a very profitable day, and goodbye for now.